Hey everybody, happy Friday. Great to be with you today. Mike Fairborn, Senior Manager, Trading and Derivatives at Charles Schwab. Folks, today we're going to take a look at the markets in a very, very volatile week. We're going to look at markets, sectors, and stocks on the move. Specifically, we'll look at news that are tied into stocks and maybe some interesting technical breakouts that coincide and correspond to the chart data itself. So I look forward to diving into that with you all today. We've got plenty to look at. We'll look at specifically to some of the correlations in the market that we're seeing right now, what we can be looking for to potentially be driving markets going ahead as well, because there's a lot of news and a lot of potentially climbing the wall of worry right now. So we'll dive into that and welcome to all of you. See many familiar names, and we do have new folks here today, folks. For all of you that are new, welcome to our group where we do look at we just kind of basically take a look at what's happened during the week in the markets and what might be setting up into next week within this class. And so, yeah, any questions, comments you have, throw those in the chat box. We can address those for you. We do have Connie Hill in the chat helping out. Appreciate Connie being here with us today. And yep, welcome to you, Will. We got others in here. Scott, Cecil, Jay Richardson, many more. Wiley, how great to see you all. Folks, let's dive on into it. Plenty to look at. I'm really looking forward to it as well. So with that, some disclosures here. The information provided is for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. Now, the paper money software application is for educational purposes only. Investing involves risk, including for some products more than your initial investment. Futures and futures options trading involves substantial risk. It's not suitable for all investors. We're just going to be looking at the charts though today. And past performance is no guarantee of future results. Now, finally, too, we do want to take a look at the Stacks index. That's the index that we have from Schwab. I just wanted to state that historical data should not be used alone when making investment decisions. The Stacks is not a tradable index and should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. Okay, so with that, let's do this. Let's go ahead and let's just dive on into it. And what do I have right here? Okay, that's right. I was going to look at the S&P 500 initially, but folks, what I wanted to pull up here just to throw out real quick is just this combination of the MAGs, because the MAG 7, we could just create that, of course, on our chart. The MAG 7, as it's called, also referred to as the lag 7 through this time frame. But hey, we're right at the 50-period moving average, and that can kind of represent that intermediate term to short term range. Where are we on the verge of maybe breaking higher? I want you to park this in the back of your mind as I try to draw a straight line in there. There's your 50 right there. Sometimes that can present support and resistance points right there, the 50-period moving average, but also you can see that that area is also too maybe anchored a little bit by some prior resistance. Now I bring this up because previously it had been mentioned that the MAG 7 represents about 40% of the S&P 500. So you'd have to say, you're getting close to that 50% mark. If you see strength in this, if you can take out that resistance level, which we happen to be sitting at right now, so this could be a good one to keep in mind. Now, there is an ETF for this too. We don't go into ETFs in this class, but I did, create that ETF just by doing a plus sign after each one of these in the symbol box. To save you some time, I'm just going to go ahead and just copy that and throw that right into the box right there so you guys have it. Yes, it is long, but if you count it up, there should be 7. There better be, because I've been using this for a while. But so there's your move right there. Do we pause around resistance or do we break through? That's the key question. You probably want the other half, close to half of the S&P 500 performing. And I'm going to break down some of these stocks specifically. But hey, we started off with this. That's great. Let's go to the S&P now. And let's just take a look and see where we're at. So we had a pretty good rally here, and this is getting a little bit busy. I'm going to take off the 54 now. I might just keep that 200-day in there. That's a big moving average. A lot of institutions will utilize that. For bull markets or bear markets, if you're above bullish, real simple, right? It's just binary. If you're above it, bull. If you're below it, bear. I guess we're back into bull market territory this week. And as you can see right here, it would be interesting, wouldn't it, if this rally continues up to 7K to 7,000. Now, some people are saying, will that happen? That's going to be, that's going to be determined, isn't it? We're going to have to wait and see what we get with the S&P 500 here. I can't help but tap in just to a technical drawing here just to kind of highlight this. And we're going to use the Thinkorswim tools right here, bottom corner of the screen, to highlight one of the three major gaps out there. Okay, one of those major gaps is referred to as a measurement gap. Now, we do get this potential here. We'll see if we do. I'm just going to take the move right off the bottom to the top of the gap, and I'm going to copy that exact same range right there. Let's just duplicate it. I'm going to pull it right up to where? The bottom of this gap. And you can see it right there. Now that puts us, yes, it does put us a little bit north of 7K, where we'd really saw a big round number here. But it does say if this is a measurement gap, it could be in the cards. Again, a lot of this could depend on the tech stocks coming back. My next question is to you guys, and throw this into the chat because I want to hear. What is going to make the Mag 7 go higher behind the scenes? What's going to be the engine driving it up? We know what to look for on the chart, but what's going to drive the chart? The chart's not just going to drive the chart itself. Sometimes patterns, we see patterns, but there's something behind the scenes that could be driving it. And what might that be? What do you guys think? What could make the Mag 7, start to show improvement, maybe potentially start to show gains up here into these categories? Excuse me, I should say to these levels. And this was an old resistance level right there, by the way, that we did break through. We did actually, this has been progressing for a while. That's a close above the high, the low day. New high, new high, new high. Oh, you're knowing it. Scott, Jay Richardson. Yeah, Fed rates could tie into. Now, earnings is what I was looking at. Earnings and earnings expectations. As we look at those Mag 7s, right? That could play a huge and a very, very key role. Let's just move over here real quick. There's the NASDAQ. Same similar type thing, right? We might, and this is actually getting even closer to the 2600 if I use this gap over here. We have an area where it might run to initially, where it might find resistance. I'm just going to, in this case, do a quick one. I'm just going to activate that drawing. Since I've measured it out, I'm going to pull it up over here. Ooh, look at that. Whoa. That's 26 right on the money. Why is that interesting? I can think of two reasons. Here's one, and here's two. A high and a high. There's your measurement gap. But, earnings, we're right in the midst of earnings season. And a matter of fact, what we're hitting in terms of earnings right now? You know what it is? Banks. Banks could also play a role to help us. Banks are one of those areas that do have higher earnings expectations. If you guys are tracking that, I did put out some tweets on that. You guys are welcome to take a look at my tweet history. I'll just show it real quick over here. And I'm going to just type this in over here. Be sure and follow Connie on X, Connie Hill CS. She's got some great information there as well to follow. But I do have some information on some of these tweets. I'm not going to go into in here. I'm not sure it's going to fit or work quite right with the tweet. Oh, here's one of these companies right here, Apple. I just mentioned one thing, and what is Apple doing? Well, Apple's kind of at its own resistance level as well. I'll post these out from time to time. I just posted this right before we got going because this is the type of information I'll put in those tweets for you guys to have. It's really tied around news and things like that. In this case, you could read about it. Apple, its first foldable iPhone, which, by the way, Samsung test marketed for a while and has been pretty successful. I think it might be taking market share, and that's why Apple jumped in with the iPhone, but could be delayed. The shipments could be delayed due to some engineering problems. And so that's really interesting. That's just one stock right here. Getting back to that Mag 7 driving the markets higher, that's one of those issues because if that kind of followed through, maybe we'd already be above that range. But who knows for sure? Okay. But tying this back in, folks, to earnings, which is critical. We do have earnings coming out this week. I want to highlight this because this does play into one of our sectors, which I'm going to dive into in just a second. But specifically, as we look at some of the stocks, or some of the earnings specifically within companies, I mean, yeah, you've got JP Morgan. It's really kind of this is what kind of kicks off earnings, and this can be interesting. So you got JP Morgan. Go through the list. I'm talking the big names here. Bank of America. Things to be mindful of. Is this next week? I still think, yes, it is next week still. Okay, Citibank. Go through them. Wells Fargo. We'll just last one, Wells Fargo. You guys get the idea. keep an eye on bank earnings. Sometimes they can play a key role in terms of prices moving higher or lower to start us off with the earnings season. But yes, Mag 7 earnings and things along those lines can be very, very, very important. Now, I don't want to miss this, so I'm just going to start this off too. With our Stacks Index, this is from Schwab. You guys can get this. Just do like a simple Google search. Just type in STAX. It's right there. X, though, for stacks at the end. It just gives you a general feel of where many of the investors within Schwab have been trading at. In fact, I'll just quickly read this right here. Client, this just states here, client turned slightly bearish in March as the war began in Iran, and that's just the next key point we need to talk about, right? What was going on over here. There's the dip. You can just kind of see how investors have been basically trailing up higher. We dipped off a little bit, but they had really been lagging a little bit for a while. That's investors getting on board. In fact, you can see over here, even though we had broken higher, let me just point this out. Collectively, Schwab traders, well, investors holding positions, look at that. We made new lows as we were breaking out. So some sentiment for sort of a pause, you could say, out there. And we kind of held this a little bit. In fact, when we were still climbing over here, we began to dip a little bit. Now we did spike, but that spike came just as that war announcement kicked in. And well, what happened there? We know what happened. We'll just go right back to the chart. That holds a history of what happened. That's your pullback right there. Of course, yeah, the big news in terms of the 2-week ceasefire that came out as well this week as well. So there's a lot going on there, and I know that's a little bit it's concerning to see. Another key driver is we're still focusing on the markets, what can drive the markets. Yes, the Mag 7 earnings that tie specifically into that. Here is a look at crude. So crude light, just looking at the futures oil chart here, you can see that we did come down into a little bit of a sideways range, and we are currently just slightly below 100. Well, okay, about close to 5 points below, but that is your big spike. Now, that's a huge spike. And how does that spike look, big picture? Wow. This took, I mean, this was a spike towards the end of the rally here, but a run like this can take months and months and months to get to. We did that in a matter of just maybe, a month or so, getting above that level. The real question is what's going to happen over the Straits of Hormuz, and can they keep that open? And what's the situation there exactly? We don't know how that's going to unfold. Here is basically sort of the big play, though. Okay. So it starts off with a geopolitical event, a war. Okay. We go from an event that happened, a war type scenario. You've got major event there with Iran. Okay, so you've got the event. We'll just say a war type scenario, right? How does that progress across the economic chain to get where we're at? And I'm going to say I'm highlighting this because these are risks that I think we need to be aware of right now as we kind of encapsulate what's been happening the past few weeks. But we have a war. Now, within that war, what happens? How does that unfold? Okay, so you've got the situation where we've got I'm just going to go, the Straits of Hormuz. Okay. Now, do the Straits of Hormuz stay open or not? Let's just say they don't stay open um, long enough. So what that could do is it could impact the supply situation with oil, right? The supply of oil, assuming demand is relatively stable. Now, this is how a lot of these economic events unfold from that perspective. So it goes into oil. Oil prices go up. So does that occur? If so, we can see oil prices go up. And I'm just going to state one word in here, inflation. Okay. So inflation comes up. Now let's just continue on with this for a little bit. If that inflation drags on for a little bit, that can have an impact on spending. I'm just writing it all out. If I'm going to write out inflation, I'm going to write out spending. Spending. And what would be the next thing that would happen? If spending is impacted over time, that's what my little dots represent. Time. You guys get it. Time, dot, 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 dot. If that continues to occur, this happens to be where we're at right now. So far, we've gone check, check, check. Yes, check. And is there some perhaps yes? That's the question mark. We're kind of in this range right now. What would be the next thing that could be impacted? What was the key driver that we just talked about in the markets? The big driver, perhaps, out there. It comes down to somebody's going to say it. Somebody's going to say it. All I need is one person to say it and we can move forward. Actually, I'll just type it in. It takes a little while. There's a little bit of a delay here. Let's just do it. Earnings of the companies. Believe me, it plays a key role. And there it comes. Wrong, got it. Yes. And by the way, yeah, contraction ties into it. Yep. Employment. Okay. A lot of different impacts, right? But what has really the key correlation with stock prices over time? Projected earnings. A lot of analysts will say, and this can change, but if you look long history, long term, it's earnings. Earnings play a key role. So that is what I would say, perhaps a lot of analysts might be working their way down the economic chain there and say that's where our real risk resides, is right there. So now you guys kind of have a roadmap of things to keep an eye on, perhaps, that from just an economic perspective in terms of, tracking this and seeing where we're at. Just because, gosh, I know we got stuck on the oil chart here, but we'll go right back to earnings here. Companies, what has the huge correlation with stocks? Well, it's earnings. Corporate earnings tends to be a big one, but it does stem a lot of times with inflation. Interest rate, that was brought up in our little chat here. It was brought up for sure. Interest rates. By the way, the Fed just so I should say the CME watch list came up with the next Fed meeting at about a 0% chance of dropping interest rates, but they still say that there is about a 30. I'm just going to say about, because this does change. Gosh, it does. About a 35% chance of a rate cut this year. 35%. Okay. That's the CME Fed watch list number that they come up with. So I just wanted to highlight that right now because that is the other factor too. That can obviously help, but the hikes would not be good, but the cuts could be good. That's for a cut, not for a hike. So now you got a few different things to keep an eye on. Let's see how we do. Oh, by the way, there is a note in the chat. Appreciate Connie listing that there. Survey time, she said. If you get a chance to fill that out, there's just two questions. And there's a comment section if you guys are getting value from these discussions, if they're helping you to kind of see big picture, market sector stocks, let us know in that. My manager looks at those as well. And by the way, the thing that really helps us know that we're doing a good job here is if you can like that, in terms of, for Connie and I, the presentation we're giving, that gives us the best indication too that you're finding it useful. While I'm at it, I got to say this too. So the last thing I would say is be sure to follow us on X, Connie Hill CS, Mike February CS, and follow us on the Trader Talks channel. I know many of you already are on there, and I love that. We have several followers, but I'm just going to show you where that's at. I'm just going to post the link so you all have it. I'm almost there, and it's on its way. There it is. Okay, so here we go. We're here. I'm going to post this link in the chat because we do have a number of new folks here today, and I just want to make sure you guys get it. There you go. That's the link right there, just above the pinned link at the bottom. And it would say subscribe like right over here. It's really nice. Obviously, it is free. I always chuckle because I always thought it was free anyways, but hey, we'll say it. It is free. The playlists, these are recorded events. You can go in there. You can use the magnifying glass to search for different class topics. You can find those as well. Okay. So for example, I did one this week on the money flow, money flow, and you'll see it right there using divergences on money flow right there in our swing trade class. If you want to check something out like that. All right. Anyways, there's some cool tools there to take a look. Connie's got some great stocks, great classes. Be sure and check out what Connie has too. All right. Well, let's get rolling. Okay, so we've talked about markets. We spent quite a bit of time on it because there's a lot going on with markets, and that can be that can really, really be informative for us when we see the markets break above the 200-day moving average and extend higher. Now, this isn't going to surprise you guys. Well, it might surprise a couple, but I think most of you would not be shocked at all to say that pattern right there. Yeah, if you go ahead and just look at the S&P 500, you're going to find a lot of stocks that look a lot like this, folks, a lot. They came down almost like a V shape. They gapped right there and going higher. What does that tell us? It tells me that the market might have a lot of correlation to those particular companies. Now, not everyone, but there are some. So let's look at some of the companies, sectors specifically, that have been moving outside of just this kind of movement on the market, just exactly following it. So let's go ahead and do it. I'm going to jump over here. Let's go right into our sector grid first and foremost. And then we'll dive into some of the relative strength factors as well. But what do you see really kind of leading the market right now? Now, energy has gone just counter to the market. So not energy. We got to go red on energy. It's down. Could be flagging. Could be a nice bull flag over here. Something to keep an eye on. Discretionary up. Consumer staples, that's kind of flat. Industrials, wow, looks a lot like the S&P 500. Healthcare, somewhat. Tech, communication services and tech, you know it. That's just bouncing, just like the market, so are financials. Utilities, kind of a little bit different, but yes, definitely participating in this bounce. Lastly, RE, real estate off the bottom for sure. But I'll tell you one that had kind of pulled back a little bit here, but then really has been extending a little bit further. And I would say that is materials. Now, what have we seen when we talk about gold and silver? Gold and silver, folks, they did have a bit of a pullback. And a lot of these companies, not just the gold and silver, but some of the chemical companies as well, they had a bit of a pullback after that, a big run. We might be able to just look and see what some of these companies have been up to as of late, just to see if there might be maybe some interesting flag patterns or potential setups within this group. Yeah, let's do it. Quickly though, too, oh, by the way, many of you are new, so I just want to make sure you guys have this so you can track this. This is a great way. These are all S&P 500 companies that fit into these sectors. So I'm going to share this grid. Let's just put this into the chat so you have it right there. And again, to get this in your own charts, just go to Setup, Open Shared Item. So copy that first of all, Open Shared Item. Throw that sucker right in there. Hit Preview, and then import it. Once you import it, you're going to see it right over here in the grid charts. And the grid charts, what I mean by grid is grid charts. That's the icon. And you'll find it there. It's just a good quick way, but these are all 11 S&P 500 companies. You've got the reference of the S&P down here itself, how it's doing relatively speaking. You see many of these just look just like the S&P, highly correlated right now. But everything else are stocks that fit within here. Now, the next one I'm going to put in is the sector rotation grid. And what's fascinating about this is this just shows us how it's performing relative to the market itself. Okay. Is it incredibly correlated or not? You'll see over here, back to our materials, 6 months. Look at this. See this? It's like a little mini flag as part of a bigger flag. And that, folks, is like a pennant pattern. Now, this is more sensitivity. This might show us right now where the money might be coming to in this group. And we're looking over the past little while. So where has it really been heading with the market? Energy down clearly. Communication services. Okay. What fits in there? Company like Google, a Mag 7 stock, fits right in there. That's some strength. We could find some specific strength in here because many of these companies, folks, they're going to be above here too. So this gives us a really good feel for what's going on there. I need to share this with you as well, though, because I tell you right now, people are going to ask for this. If I don't share it, I've been called out before. There it is. There is the rotation. These are important. All right, to get. So now you got markets, sectors. I want to dive into some of the material sectors. But before we do that, let's just go ahead and hit that Google right now and see what is going on there. So here we go. Here is Google. Okay. Do you guys see what I'm saying? Where's the strength been coming in, and how could that potentially influence the chart pattern here? Well, this stock pulled back down. I had this interesting level of, well, it was support here, and then it became resistance, but we broke through. We broke back up above it, and we did something really quite interesting too. We extended beyond that prior high, and we're resting on it right now. Now, of course, we are into earnings season, so park that in the back of your mind. But this can, it doesn't always do this, but sometimes it will end up flagging. We already talked about that. It's sort of a measured move. It's a measurement gap. That could probably take us and test those highs up top here, if in fact things do unfold. Now, one quick note, if you do go through and take a look at the some of the posts that I've gotten in there, if you want to take a look and scan through some of these, what you can do is you can look and you'll find that a number of analysts have said, you know what, we're roughly about, you know, collectively a group of analysts projecting earnings, and this is like right over in this time frame right here. I know it was towards a low, but we dropped like 8% or something. But it was really interesting because it was rough. I'm just going to say roughly. It's in this range, but there was like an 8% estimated higher earnings too. So there was a really huge divergence between estimated earnings and then price action. One was dropping prices while earnings estimates were going higher. Now that could be like a fundamental type driver, but they're projected earnings. That's the key point. Will it unfold or not? That's the question, but that was a pretty big gap. And we talked about earnings, that could play a key role. So as you watch over here, sometimes you say this could be kind of a concern, but it could also be a driver too, if that is the expectation. If number of market analysts and participants are anticipating upward moves. It is off. Yeah. Money flow is leveling off on Google. It had been down for a little bit. I think that's a great catch. Yeah, see, it went down sideways a little bit. We really haven't seen a ton. Not this week. Actually, that volume is quite weak. Yep, on that breakout. So sometimes you get that on the first leg. If there's a second leg, it's almost like investors will oftentimes demand, hey, there's got to be more volume coming in than that, because that does look low. But hey, it's been a volatile week, hasn't it? And it just caught a lot of investors off guard. But that is one right there. Now, I'm going to sweep on over here because we're not going to forget about materials. We're not going to look because we just looked at the charts. So I'm going to go over here and click on scan, and I'm going to pull this up over here, and I want to highlight just a couple of things. If I scan through here, um, I know exactly what to scan in. Here's the scanner. Here's the stock hacker. Here's the S&P 500. We just looked at that on the charts. Now I can go ahead and just intersect that with and find specifically exactly what I'm after. There are all the materials right there, every one of them. We don't know which sectors are or which industries within the sector are the strongest, but we have it right at our fingertips. We can just click like that. And there you go. There are 25 of them. There's only 25 companies that made up that interesting chart to kind of keep an eye on. Now, I'm going to do this right now just to highlight this. Lord knows I've got a lot of watch lists, but I'm going to create one more here for you so you guys can see it. I have so many on my one that I've had for years. I've had to delete some because the line's so long. By the time I select it, I can't even find them. There are just so many, it extends off my screen. It's kind of an issue. But if you save it, what you can do is just go like this. S&P, name it something you really, materials, and click on save. And now I'm going to go over here into my watch list, and we're just going to find some of these companies right now. I'm going to show you what they look like so you can see them specifically. S&P, there it is, materials. I just created it right there. I'm going to zoom over here, link it up to my charts. We're going to be looking at maybe one of those areas that might be setting up for next week. And that's why I'm going through the hassle of doing this for you guys so you can see it. There's all 25. ALB. Okay, now, as we just mentioned that, park in the back of your minds, could we be setting up here? Could these be of some interest? Because we already knew the S&P sector had some good, strong trend strength. The trend was solid through here, right? The trend was on the S&P materials. And you can see why, because many of these companies are making that move, right? They're part of it. Well, with that, there's your sideways move. We broke up and now we're just kind of consolidating. And the real thing that I think a lot of investors might be looking for within these companies, or even when they just generally see maybe a pattern like this set up, is maybe the continuation of the flag pattern to extend the longer term trend up? Question mark. That's what they might be looking at. Materials, though, are giving us some of these indications. In fact, I'll just go ahead and take a look at a couple of things here. AMCR right up north, right up towards a prior high. This one's off the bottom, of course, but a potential breakout above a big round number might help something like this. That is right at 300. Let's go ahead and scroll through and just see what else we've got. Now that was a fairly large trend. Do you see the possibility of this continuing higher, breaking highs, flagging? CF, really, really strong move. Look at the consolidation right here. Could it be waiting for a move? Now these guys do fertilizer type products, phosphorus, nitrogen, things along those lines, which by the way, did get paused within the Strait of Hormuz. I think it was something like 20% of the supply was coming through the Strait of Hormuz. It was a fairly big, could have been 40, but that's coming from the Dow Chemical CEO mentioned that. Another one. Oh wow. So here, this is what I'm getting at. Something like this. When I say, oh wow, I'm just saying simply, let's see. All I'm saying is that, yeah, you can get a scenario where you might be getting little mini flag patterns over here. That's all I meant by, oh wow, there's one right there. Because why am I saying that? It fits with the sector flagging. We're just spotting what happens to be a mini flag in here. So tracking this down, keeping eyes on this, it could be of interest as people, as we could potentially look into that. Okay. So that would be potentially something to consider. Now, right now, oh, there we go. Now it should work. Okay. All right. So what's kept this trend up? Do you see it? Higher highs, higher lows, pull back. Possibly again, you're getting some candlesticks in here. So yeah, I mean the possibility of even if you were to get like a close above the high, the low day, which we don't have right now, but like that would be your low bar. If you start to break out here, traders looking at this might be saying, well, hey, you know what? That could be an extension of this move going higher, just like we've seen. When that happens, we might be getting that. We might be getting that. We're finding strength in the sector. This is how we spotted these. There's Dow, very similar. I know there was some volatility there. That's kind of what it's been like. But watching these for an extension, they have been following through. Now, when traders look at this, they might be looking at levels down here for potential exits below the range, using particular maybe ATRs or whatever it is they're looking for. Let's continue on with these. Kind of low, the downside. FCX already running. So this is gold and copper. It's about 85% copper and about 10 to 15% gold, 20 to 15% gold, that is. Some are underperforming and some are possibly flagging like they had been previously. So hopefully that's a really good tool that you guys can take a look at and kind of dive on into. We did a trade previously in one of my classes, STLD. I wanted to go through every single one of them just so you can see it, that index, really it is an index of that sector is made up of a number of different groups. Here's one here. Now, some traders might be, again, what is the hold level? Well, it's right there. I realize we gapped down under some of this volatility, and that's going to be a risk. That's going to be a risk factor for sure. But look at that right there. If we just put an alert in here, it could be the possibility. I mean, we could see the possibility of a trade. I'm just going to say hold question mark. Hold right there. And we can get that sent out to us, let's say via text message, for example. But a quick note on that. I just want to highlight this because if you do go in here, make sure that you under notified down below where it says mobile. Yeah, you've got to go in and select that. But I use this tool all the time. Up top here, application settings, and then notifications is where you can put that email address, you can put that text information in there, and you'll be set. A quick note too, just to highlight this on those alerts. Alerts aren't guaranteed to be delivered or delivered at any specific speed or time frame, and should not be used as a replacement for actively being aware of your positions. Now, I haven't had any issues with alerts. My alerts have worked, but I'm just saying that we just don't guarantee them, because there's a few different steps and systems can go down. I've never had an issue myself, but just wanted to read that, okay? All right, but there you go. So I put that in lieu of a potential paper trade order because maybe I am looking for a close above the high to low day. I will say this too, though. When you are in materials, anytime you see, folks, this is very, very important. Anytime you do see this, a gap, that gap, just by pure definition, is volatility. That's a big move to the downside. And it was one that people really didn't have a chance to get out of unless they were, whatever time frame they were trading. But if you were just looking at right when the market opened, it gapped down lower. Some of you might have experienced that, right, with some of your stocks. That is not preferred, all else equal. We like the gaps up, but when you get the gaps down, one gap down could be another gap down. But this is, I think, really tied into just news events. You have to be very kind of careful with things, too, if they are tied specifically into energy. And this one might be, but I'm just throwing that out there so that you are aware of it. Now, a couple more things I wanted to hit, too, because we did have some specific news out there. And let's go through these. I did mention as we break down some stocks, so getting now into the news that may impact these stocks into next week. You can see over here, yeah, there was that resistance level through here. We'll find out. It was right around that 260 level. We'll find out if it's actually like right there. We'll find out if those delays with the foldable iPhone are causing issues. Can Apple creep higher? That could certainly help the Mag 7 and the overall market because this does play a big role. Now, Tesla is another one, and Tesla did have it was one that we looked at yesterday in our ThinkScript class, but it did have one that had the death cross. That's the 50 moving average going below. Let's just show it. There. Oh, shoot, I've got it already. I don't always have the death cross right there, but now I do. Let's hit it. So the 50 just going below the 200 because we've been down over an extended period of time, which can oftentimes mean a longer term trend down. There's an interesting break below 375. Lower, lower, lower. We don't know, but I will say this, that Tesla's pretty clued in a lot of this. And they did, there was, just made some notes here. They did report that they're developing a smaller, low-cost EV that could help sales volume, but may pressure profit margins. So sales volume revenues could go up, but profit margins could go down. What happened? Nothing. I'll tell you what happened. It gapped up and then it went right back down because a lot of times it does. We're talking about profit margins. What follows profit margins, folks? Let me tell you, earnings. Earnings. Those profit margins start to dip, well, it can have a negative impact on earnings. That's the real question. But they did introduce a smaller low-cost EV, which, by the way, could be good for general population, people that want a Tesla. Next one in the news, NVIDIA. Taking a look at that. Now, look at the charts over here with me. We just broke above. That is a 200-day moving average. But there was some concern raised over an acquisition they made of a company about whether key AI software tools will stay neutral for rival chip makers. Okay, and the stock jumped. It jumped on the news. So it kind of pushed back on that a little bit, but they're just saying it could hurt maybe others, but it might be beneficial for NVIDIA You know, NVIDIA, the one thing we really haven't seen too much of on this stock, another Mag 7 that you could be watching for here, is can we really break out above a prior high, folks, and like clearly break above it, maybe with some volume, and then even hold it or hold higher in terms of like a higher low out there on the chart as well. Okay. Now, you might have imagined that this company did move today, did move this week, and it's moving pretty well. And there was a lot of questions about this. I did a little tweet on this one, breaking above the 200 day. It also broke above the 50 almost simultaneously on the same bar. We broke above on AVGO, but they signed a long-term agreement with Google to provide the custom chips through, it's not a short-term one, through to Google through 2031. So now, think about it. This has been considered to be like a mover within the Mag 7. Is it always a mover? No, no. But let me show you this right here. Coming over here, let's just visualize it and just see how much it does play. Where's your AVGO? Remember, we're looking at, we talked about Mag 7 because Mag 7 can play a big role in moving the markets. That's why we're hitting some of these big stocks. NVIDIA had some news. Apple had some news. It's in the red, but you know what's that? Well, Google. What else do we have though that is also big and could be a market mover? Of course, Microsoft, Amazon, right? We're sticking right within the Mag 7, but this has been an addition sometimes to and Tesla was the other one we looked at, but AVGO plays a big role. That block is it's not a little block. These are little blocks over here. These are teeny. I don't even know what these companies, they're too small. You can't even put the symbol in them. This can be a mover. Could that benefit Google and Broadcom? It could. Last one that's been moving on some news. Watch these into next week because they can play a big role. But we did get some news announcements on here. And this is another partnership with Google that they had. Remember, this company did get a big capital infusion from NVIDIA investing in the company, but that one gapped up very big. And remember, this was it was expanded AI partnership that's going to focus in on CPUs, custom infrastructure processors. So watch these into next week. What are we looking for? It's kind of tough when it just keeps going like that. But within this class, and I talk a lot about this in my swing trade class too, it's this, folks. Can we get maybe some entry points? Some of you do trade on a shorter term basis, but over here, yeah, it can be a little bit tricky. It sure can be. Now I'm going to pull this up. We can look over here because I did want to highlight just one thing before we're all done. Even though we did a pretty intensive review on the market sectors and stocks in the news specifically, but I wanted to go ahead and just take a look at our markets and sectors review and just hit a couple of these specifically. We did get an interesting bounce over here on the McClellan oscillator, right? Tom McClellan says if you go below a minus 100 and back up above a minus 70, you're looking at 2 to 3 weeks of reversal. And that could be positive in this case. How does that stand? That could be a positive here. We've tracked this on the markets and it has been interesting. 2 to 3 weeks fits nicely within this time frame as a technical indication. We also had the advanced decline line, higher highs, higher lows. If it starts to break these highs over here, that can precede a market rally too, because we're looking at market breadth over here. Just a couple more and we're all done. That's a market breadth indicator, SPX EW. It's an equal weight. So those boxes that we just saw on the Mag 7, let's make them all the same size. Now you're getting market breadth by using that symbol. If this starts to make higher highs, higher lows, it can lead the market as well. Okay, key point I wanted to hit before we're done. The Hindenburg-Omen, that's 4, but that's 3 back-to-back weeks of a fracturing market. 52-week new lows made in the market, 52-week new highs. Markets can fracture, but only when you get a lower low in many cases. It can influence the trend coming down. So if we don't get a lower low, it might not spell out such an issue, but here we go. I want to finish on that, folks. Give us a like. If you did get value out of it, be sure to follow us on X. And folks, there is a survey link in the chat. It's been great being with you all today, but we're out of time. All right. On that note, thank you so much, Connie, and it was good to be with all of you today. Have a fantastic rest of the day and a terrific weekend on the way. Take care, all.